Hey everyone, welcome back to our video series for real estate investors, how to use QuickBooks to manage your real estate portfolio. This is part 9 of our video series. I'm going to get into finishing up the chart of accounts. We've spent a lot of time so far on the chart of accounts, but I think it's really important. And in this video I'm going to just go over some other account types you might run into and briefly explain our income and expense accounts and just kind of look over those and see what we've got going on. So I'm here in my sample company. To get to the chart of accounts, I always do Control A and then I maximize. Actually, if some of you out there know the keyboard shortcut for maximize, that would be awesome. I've used Alt and then I think it's Alt dash, but there's no keyboard shortcut for maximize. You've got to use the arrow keys to go down. So if some of you know that, that'd be awesome. Anyway, I always maximize just so I can view my screen completely. Okay, so we've messed with bank accounts, we've done fixed asset accounts, we've done our equity accounts. Now I'm going to go over some of the income and expense accounts and then some other nasty types. I have not changed any of this since the QuickBooks setup, so if you've been following me from the beginning, this will all look the same. The only thing that we've worked on so far is depreciation expense, and we've made some changes there. I'm going to start with expense accounts because there are a lot of them, but for the most part, this stuff is okay. As we go along, I will probably make some changes because expenses are really dependent upon your business. Some people like to get real surgical and they like to get real detailed with this stuff. So you might have an account for postage. If you're mailing out a lot of postage, you might have an account for internet service providers, or some people might have an account just for office supplies, and they throw postage, they throw internet, they throw everything under office supplies. You can see we've got one here under our default setup. So it's kind of up to you. As I go along, I will probably make some changes, but it's really, I think that this is good enough for most people. I will make some changes right away, or just highlight a few of the important accounts that you probably need. And the first is definitely interest expense. This is going to come into play when you're making mortgage payments or when you're making any kind of payments on a note or a loan, whether it's private or commercial. You need to have an interest expense account. And for me, I personally like to give this a little bit more detail. I like to have a little bit more breakout. So I might say mortgage interest expense, or I might say hard money interest expense, or any other type of interest. I do like to break that out to see the cost of money, to see how much this money is costing me. I'm not going to do that now. That can come later. But you definitely need to have an interest expense account. The next is insurance. Those of you who are insuring your business along with your properties can probably do all right with just throwing that in here too. But definitely rental dwelling insurance needs to happen. I might also rename this to say rental dwelling insurance, or rental property insurance, to differentiate between business liability insurance, or if you have some other type of insurance that you're carrying, maybe as a contractor, you might want to differentiate that. But again, how surgical do you want to be? I'm an accountant, you're not, so for you this probably works pretty good. Dues and subscriptions, you're probably not going to use that. You might delete that. But if you belong to, say, a trade organization or a real estate club, something like that, you probably would use that. And let's see, taxes. Definitely need property taxes. I don't like how they set this up, taxes, property. I prefer property taxes, but all investors will be paying property taxes, whether or it could be through your escrow service, or you could be doing this manually. Either way, you've got to code those taxes to this expense account. This is definitely needed. For those of you who pay utilities, most people probably pay water, some of you pay electric, some of you pay gas, some of you might even pay internet and television. This would be your account here. I like to break this out even further. I might make some sub-accounts here that say gas, electricity, garbage, sewer and water, etc. But again, if you don't want to get too surgical, it's okay to throw these into one account. And the last one that I like is Ask My Accountant. And this is a good one to have. This is kind of, just think of it as a dump account. That's the kind of language that an accountant would use, is a dump account. And it's just, you're dumping everything you don't know how to do into this account, whether or not it's actually an expense. It could be an equity. You're like, how do I do this? We'll just put it into Ask My Accountant, and that's a good thing to have. So I recommend keeping that. All right. Now we go up to income, and the all-important rental income is already there. For me, I also charge a pet fee, and I like to break out my pet fee different from my my rental income, because a pet fee is not rent. Pet fee is a fee. So I like to have another account. I'm just going to do this here real quick, and that's Control N for a new account. And this time we're going to have an income account, so I don't need to use the down arrow. I can just hit spacebar on income, or if you like the mouse, you can click on that radio button to get income. And then I'm going to Control Enter or click Continue to move me to the next screen. And I'm going to call this Pet Fees. It's not a sub account. Don't mess with the description. Control Enter. So now I've got two income accounts. I can track my rent, and I can track any pet fees that I get from my tenants. Some of you might like to include a laundry. If you've got coin-operated laundry, that would definitely be an income account, and that would be an operating income account. So I'll do that one too. Again, Control N and select the income category. Just hit spacebar, Control Enter, and we might say, what would we call this? Laundry. Let's just say a coin op laundry. I don't know if I like that name, but that works. Control Enter. Coin op laundry. That's definitely an income. You're going to be probably paying out more in water and utilities for letting the tenants use that, but you want to track the amount of money that you collect for that specific activity, for laundry. So other incomes you might have would be security deposits. If you retain a security deposit, that would be something that you would have. But for now, I think that this is pretty good. I don't want to get real granular with this. We can set up those accounts as we go along. Income and expense accounts, you can have a lot of them. Most people have a lot of expense accounts. That's alright. We can always set those up as we go forward. We spent a lot of time with the balance sheet accounts earlier. Those are the important accounts, in my opinion. Well, they're all important, but spending a little bit more time with these up front generally helps people understand what's going on. So those are good. You've noticed we got a couple other weird little accounts here under type. We've got tenant security deposits held, and that's other current liability. And then down at the bottom here we've got late fees income, that's other income, and then Ask My Accountant is other expense. So I'm just going to explain those real quick, and the best way I think to do this is just go to Control N and start a new account. So we've gone through income, expenses, fixed assets, banks. We haven't done any loans. We haven't done any credit cards. We've done equity. And there's a third option here, or a third way you can do this, is other account types. And this is where we get weird stuff, where most people say, I don't know what this is. And I'm just going to highlight a quick couple of them here. Most people know what accounts receivable is. And when you see this current asset or current liability, generally that means it's something that has a lifespan of less than a year. So if you took out some hard money for 6 months, that is an other current liability. And if you've got some kind of if you have some short-term securities, if you somehow did, most of you probably don't do this, but if you invested in a 6-month bond, or if you bought some stock and you only going to hold on to it for 3 months, then that's definitely an other current asset. So whenever you see this term current, that usually means that it's shorter term, and the general rule, it's flexible, but the general rule is a year or less. Okay. Now, other income and other expense, we saw those on the chart of accounts too. Generally, what that means is that something that's outside of your normal business operations. So rental income, pet fees, laundry income, that's all regular business. That's what you're in business to do, to collect that income. But say you, I don't know, you sold an old refrigerator. You salvaged it. You're not really in the business of selling old refrigerators. You just kind of had a one-time deal there where you found somebody to buy your refrigerator. Now, if you're selling refrigerators all the time from your units, I wouldn't put that into other income. Think of other income and expenses as something that's like a one-off transaction, something that doesn't happen very often, something that you probably don't do in the normal course of a business day or even a business year. It's really for special transactions. And if you remember, late fees income was other income, and that's there because you don't really expect to collect late fees. I would say that you might be able to put that under regular income, but I don't know. It's okay probably where it is. But think of this stuff as other income and other expenses. It doesn't happen very often. And other expense might be I don't know, an insurance payment, or you had to pay for something bad that happened. A tree fell on your house or something. You really don't need to worry about these too much. They're not that important, but I just want you to know that they're special accounts, and when you're creating income and expense accounts, chances are you're not going to be using these two accounts. Cost of goods sold, you don't really need that for a real estate business. Long-term liability, probably know what that is. That's a mortgage or anything that's not a current liability, so something that's over 1 year. Any debt that you have that is going to amortize over a year is what you would want to put into here. Accounts payable, most people understand that. And then we've got other asset, which I wouldn't really worry about. It's kind of like other income and other expense. It's not a fixed asset, so it's not a building, it's not any furniture and equipment. It's just something that you it's kind of a one-off thing that you just have or own. But I wouldn't worry about that. So the ones that you will see really on the chart of accounts are, you're going to have other current liabilities for things that are shorter than a year. You're going to have you probably won't have other current assets actually. You're definitely going to have accounts receivable, accounts payable, long-term liabilities, and you might have one or two other incomes or other expenses. The rest of the stuff is probably okay to ignore. So I'm going to hit escape to cancel out of that. Back to our chart of accounts. I think that this chart of accounts looks pretty darn good, and I'm willing to go with it and start getting into some transactions and how do we record stuff. So I think this is going to wrap up our video, our videos, I should say, about the chart of accounts, and we can actually get going. So leave me a comment, likes or dislikes, and let me know how I'm doing. And if you've got a specific problem, just shoot me a message, and I'll see if I can help you out. So thanks for watching, and we'll see you guys next time.